Okay, let's get back to the numbers of Wipro because we now have additional details coming in. The IT service segment revenue has come in at $2,735 million, which is a tad bit lower than what Street was expecting, because in dollar revenue terms, we were expecting a number of around 2,760, and this is lower than management's own guidance, because they had guided that in Q1 FY23, the dollar revenue number should be between 2,748 to around 2,806, and that number has come in lower than expectation. The biggest problem area for the company would be the IT service operating margin. The IT service operating margin has come in at 15%, a decline of 200 basis points. The street was bracing that there is going to be a margin contraction, but not to the level of 200 basis point decline that we have seen on a sequential basis. The only saving grace in the number, if I can call it that at the moment, is that the guidance for the coming quarter is quite strong. They're working with a guidance of around 3 to 5% growth. The street was expecting that the growth guidance for quarter 2 is going to be between 2.5 to 4.5%. So the guidance has been strong for the coming quarter, but this time around it does look like that the revenue profile in rupee terms has come in at 21,530 crores, which is in line with expectation, but the dollar revenue is a miss, as well as the margin is the biggest question that we need more clarity from the management for. And other than that, we'll watch out for the attrition number, etc. as well. But first, let's welcome on board the experts to make sense of Wipro's numbers. We'll have Ashish as well as Sandip joining us shortly to make sense of the numbers. Ashish, if I can come to you first. As far as the overall performance is concerned of Wipro, the margin decline of around 200 basis points, is that a big negative? Okay, Sandip, okay, we'll try and patch back with the guest in a moment, but for now it does look it is a bit of miss. Let's read the management commentary as well, when Thierry Delaporte has said that we have made significant investments in the growth engine and the order bookings grew by 32% year on year. So at least that's a good news coming in, because they are talking about large transformational deals, because Wipro has been changing its structure. They have increased their focus when it comes to the large transformation deals, as well as they have increased their focus on acquisitions as well. They say that the pipeline today is at all-time high level. So that's another good news coming in for Wipro. They say that they remain agile in the market and efficient as well, and stay focused on serving their clients better. The CFO Jatin Dalal says that at 15% operating margins, we believe we have bottomed out. So that's the key commentary coming in from the CFO, telling you that the margins have bottomed out at 15%. But is this something that the street will take heart from? Let's pose that question to Ashish Das. Ashish, my biggest problem in the number is that the margin has declined by 200 basis points. But if you go by the word coming in from Mr. Jatin Dalal, they say that the margins have bottomed out. What's your take?
Yeah. Hi, thanks for having me on your show. Yes, the margin has come below our expectation as well as street expectation. We need to understand what has happened actually, why there is so much decline on the margin side, and then we can understand that why management is saying that it has bottomed out. But definitely it's below our expectation as well as state's expectations. Yeah.
So that's the word coming in on margin picture. Sandeep, hi, good afternoon. Thank you so much for making time. Apart from the margin disappointment, this time the revenue has also come below expectation, but at least they're guiding for a better growth. They're guiding for a growth of around 3 to 5%. Would you look at the glass half empty, that it was a miss this quarter, or are you looking at glass half full, that at least next quarter is going to see better performance?
Oh, see, this is a problem which we have faced in all the companies in this quarter. And if you go into genesis of numbers, although we have not got detailed numbers yet, but my understanding is if the margins are much sharply below than what we have anticipated, it has to do with the issue of attrition which has happened in all other companies. And if it is attrition led, I would say that this is the worst quarter in terms of margin in that sense, excluding wage hike which may come in future. So I would see the 3 to 5% as a very positive thing. I believe demand in sector remains robust, and margins, we are completely ignoring the fact that the attrition is at its peak and it is cooling off very sharply right now. So it will take some time, 1 or 2 quarters, by when margins will start recovering. So I see this number, yes, there is a miss on growth and margins in this quarter, but the outlook seems good, and more details once we get on the commentary and qualitative data, then we will be able to comment better.
Sandeep, just wanted to flag out one more number. The management says they have closed 18 large deals resulting in the TCV of 1.1 billion in Q1 FY23. What do you make of this number? And more importantly for Wipro, are you expecting some sort of earnings cut to come by on the back of this quarter's weak performance? Or do you think this is something which is already factored in the assumptions?
I think the stock price reflects the negative sentiments around the sector and the high attrition and margin challenge, because 5 results have come with similar theme, and so I don't think people were expecting what has come out in the preview 15 days back. Those numbers were not at all in the expectations given the stock price, but we will be more focused on what the management is saying now on the margins and the growth. My sense is that growth is not a challenge, order book is not a challenge. Challenge will be a little bit on margin, and that has a direct correlation with attrition. And I believe that, once attrition cools up, you have to remember that a huge amount of margin is sitting in subcon cost and attrition both. Once attrition starts reversing, huge delta will come in margin. So we should be more focused on growth right now rather than margins, because margins is a temporary pain led by supply side issues.
Okay, thank you so much, Sandeep. We'll let you go on that. So, Wipro coming with a set of numbers. The profit has really disappointed, and especially the margins as well. But the management commentary seems to be on the positive side. So, let's wait by and see how the stock reacts to that. But let's move forward into the show, and let's call in Sharad, who is joining with the more insights on the chatter from the dealing rooms. Sharad.